Indian Taxation Authority has proposed new changes to filing of the income tax returns that can have a significant impact on those who own virtual digital assets or cryptocurrencies, as well as those who invest in DAOs, which is Decentralized Autonomous Organizations. CBDT has proposed a new common tax return that largely consolidates existing income tax returns in order to make the process more efficient. However, the proposal also seeks information from Indians living abroad about any business connections they may have in India, as well as whether that entity has a significant economic presence in India, particularly businesses from which they derive income. So to explain this entire episode, we have invited Mr. Indy Sarkar from TaxCrypt. He is the co-founder of TaxCrypt. Sir, welcome on 3.0 TV.
Thank you so much, Manoj.
So if you can just explain this for our viewers, sir. What is the implication of this recent announcement as the Indian accounting taxation or taxing crypto income from businesses which are headquartered elsewhere? What is the impact as far as India is concerned, sir?
So there are actually two components to this, Manoj. The first one is leading on from the February announcement where there was explicit recognition of crypto earnings for taxation. The income tax form, the ITR form, as most people would know it as, had no specific explicit section to capture crypto earnings. And therefore, the only way one could use that form was to put all crypto earnings in the other income section and therefore apply tax rules.
All right.
What this is really to make it more explicit. This change to the form was certainly expected. Therefore, no surprises on that front to recognize crypto as separate line items in your ITR forms. The second question which you ask is around, foreigners having Indian business practices is more around somewhat not entirely related to crypto, but I believe it's to do with the whole POEM rules which apply, permanent establishment, what is considered as place of what I call decision making. And therefore, they wish to see whether if India is the place of decision-making for income generated in the US, then the India tax authorities wishes to have transparency around that. And the POEM rules apply, on both sides, US, India, or any other country. All tax regimes wish to, look at that from their perspective.
So, sir, are you mentioning about the trade which is actually originating from, say, for example, in India or outside India? That's what you're referring to?
That's if you are generating crypto income. I mean, there are two separate aspects almost. If you're generating crypto income as a foreign, let's say as a non-resident Indian, and your crypto earnings are being generated in India through a account holding in India, then you are liable for taxes for local income generated like any other income that you would have to generate.
Perfect. In short, sir, what is the crux or the takeaway from this announcement for a common man who is actually reading this announcement for the first time?
The crux is, देखिए, जिनके पास crypto income generate हो रहा है, you are now being brought into a proper institutional framework for paying your taxes and accounting for your crypto activity.
All right. So if you talk about digital assets and the way forward, since we are talking about cryptocurrencies on a broad base and its tax implication, this show is to simplify, what is the meaning of tax for our viewers. So there are a lot of individuals who hold digital assets maybe in several forms, centralized exchange and decentralized exchange as well. So what is the prime difference between centralized exchange and the decentralized exchange? Sir, if you can just highlight as far as the taxation is concerned.
From a taxation perspective, the tax authority makes no distinction between your wallet holdings in a DeFi, as it's known as decentralized wallets, or your centralized wallets. The primary difference between a DeFi and a CeFi account is the DeFi is, in the real sense of the word, decentralized. It's sitting on the network, and you have direct access to your holdings. In a CeFi environment, you are part of an institution. You are holding an account with another institution, which on your behalf is providing you a wallet and holding your assets within those wallets. One is regulated and comes under the kind of KYC norms and rules and regulations that apply in India, which is the CeFi wallets. And the DeFi today is very difficult. There's no explicit recognition of how to regulate it because there are no KYC norms that apply to DeFi wallets. But as a tax, if you're a law-abiding citizen that wishes to pay taxes, as per the rules, then you have to disclose your DeFi activity as well.
So since we are talking about, you mentioned about the DeFi wallet and the trading activity. So does DeFi trading exempt an individual or trader or an investor from paying taxes?
Not at all. In fact, the government is very clear on this. Any crypto income generated, whether be it from CeFi or DeFi wallets, are all liable for taxes.
So one more question on this DeFi, since you have mentioned about, can you just explain this? Can an investor or a trader, or for that matter, a long-term investor, short-term investor, can get away by not disclosing his DeFi activities and avoid taxes?
If you think about it in the strictest sense of the word, because there are no KYC norms and DeFi wallet addresses are anonymous addresses, people might take the call that I will not disclose my DeFi holdings. But the minute you're withdrawing crypto holdings or converting crypto holdings to fiat currency from a DeFi wallet, you have to bring it into the mainstream banking system. And therefore, you will leave behind a trail which would lead to questions being asked. And therefore, it is prudent to be able to look at your tax obligations across both your DeFi and CeFi activities.
Fantastic. Sir, since you mentioned about these two exchanges and the way forward, for example, if I want to do tax planning for myself, I have well-defined tax structure in India. So say, for example, my portion of money earned will go as far as the provident fund is concerned, or for that matter, mutual funds में इतना segment जाना चाहिए, insurance में इतना है. You have mediclaim insurance, and you cover that 1,52,000, say maybe 2 lakh area. So how can I do, or an individual can do better tax planning for the Web3 universe?
The tax regime as it exists right now is a flat 30% on all gains, short term or long term. So there are no exemptions. What you were just describing in our normal mainstream income, we are allowed certain exemptions to encourage buying insurance products or buying long-term savings products. In the crypto universe, for taxation, there are no exemptions. However, there is an element of tax planning that every crypto investor needs to undertake in the new regime, considering that when you have gains, you should put away your tax obligation out of your gains into a separate kind of holding pattern, because in the event you suffer losses, your tax obligation on your gains remain, and therefore you could face liquidity issues when it comes to meeting your tax obligations.
Fantastic, sir. One follow-up question on the DeFi segment and the wallet. So if one trade on DeFi wallet, so will that individual have to deduct TDS, or how is this process, sir? Because this is something we have seen. यहाँ पर if you are on a contract basis, यहाँ पर you get 11% deduction as far as the TDS is concerned. But how is this process as far as the Web3 universe is concerned, sir?
Your question is a very valid question. Most of the TDS obligation for compliance in the centralized exchange world, because there is a financial intermediary in the form of the centralized exchange, has fallen on them. So all the various exchanges that you've seen have had to get compliance around making sure that they file TDS against all account holders. In the DeFi world, there is still there's lack of clarity on whether TDS applies. But in the strictest sense of the word, since there is no exemption to DeFi trading and TDS, that the person trading and holding DeFi positions ought to be deducting TDS.
All right, sir. One last question before we let you go and we end this conversation, sir. How is regulations on the Web3 space shaping up across the world? Because There are a lot of articles that suggest that investors are cheering this move. There are a lot of countries who have come up with the regulations. As we speak, there are broader measures being taken in some of the other country as far as regulations is concerned. So what is your final takeaway as far as the global regulatory landscape?
Regulation globally is coming across crypto assets. There is no surprises. In fact, we've had two landmark events, certainly in the last few weeks. The European Union passed their approval on the MiCA, which is the market in crypto assets regulation, on the 5th of October. The rules and regulations from an EU zone perspective is very clear. They're going to give people 12 to 18 months as a grace period to put in place all the compliance requirements. In fact, as latest as Tuesday of this week, the UK Parliament has voted on a crypto bill, which is currently under discussion in UK Parliament. So regulation is here to say. The SEC in the US is moving forward very aggressively. There's still very in-depth consultations going on. So regulation is here to stay. There are three important components to the regulatory landscape. One is the crypto asset issuers. The second is the crypto asset service providers. And third is the investor.
Fantastic.
So these are the three, what I call components or constituencies which the regulation is looking to address. And a whole host of issues: systemic risk management, investor protection, as well as fraud prevention and detection. So regulations looking to address all of these aspects. And therefore, we should cheer regulation. Regulation is a good thing because it's explicit recognition of the industry. And I think overall good for the long-term health of the crypto industry.
Regulations is good for the long-term health. That's the word coming in from Indy Sarkar. Thank you so much, sir, for educating our viewers as far as the global taxation is concerned, how an individual is supposed to plan his taxes as far as the Web3 universe is concerned. Thank you so much, sir, for being part of this second episode on the Tax Buzz. Thank you so much.
Thank you so much, Manoj. Thanks for having me.